How's it going, traders? It's the Pup of Wall Street back with another weekend review. Today we're going to look at my top sectors going into next week. If you enjoy my content, make sure to like this video and subscribe to my channel below. These two actions will help more people see my work. Also, don't forget to hit the notification bell so you know when my videos come out. And if you have any questions, please leave a comment down below. Let me know what you think about these chart videos. And lastly, keep in mind, this is not financial advice. I'm doing it for educational purposes only. So let's dig into the charts. Just a quick reminder, next week, Wednesday, we have FOMC. So the market might be choppy Monday and Tuesday leading into FOMC. And I think after FOMC, we'll have a bit clearer idea of which direction we might be headed towards next. Now, I think 75 basis points is likely going to happen, possibly 100, but I think we should see. So, all right, taking a look now at the weekly charts. This is the Dow Jones Industrial Average. You can see that we have a bearish engulfing candle pretty much right at the 30-week moving average right there. We got rejected on the week. We're back under 50 on RSI. MACD looks like it wants to cross under with falling momentum. There's nothing going on in terms of a squeeze. So I think likely, and also you could see swing low anchored VWAP. Nice close through it. So now under 313, which was our 236 retracement, I'm looking at a prior 382 at 297.52 being that next level to hit. Could come next week, could come in 2 weeks, but you could see that has acted as support in the past, back in July or June or July. And, under 296, then I think we could start moving towards 275 and potentially, 253. So that's what I'm looking at. Certainly if we get under this level here, I think it's almost a given we'll come down to 275. And then 253 would be the bigger retracement level I would be watching for if we get there for a bigger bounce. So just keep an eye on that. Again, this one, it's not my biggest watch in terms of sectors, but I just review it because, it's the 30 big components of the Dow Jones. All right, let's look at SPY. Okay, so again, swing low anchored VWAP here in purple. We basically closed right on top of it. We came up to that 30-week moving average. That's your orange line here. We got rejected on it last week. You could see all the supply that price came into, absorbed, and now we're pushing lower. So let me wait for that to clear. Now, we did close under that previous swing low or the previous 618 Fibonacci retracement. I mentioned this on last week's video. 388, very important to hold. We did not hold it. So 380 would be my next line in the sand here. Under that, and I think we're testing the lows back here around 363, 364. And then under that, 350 would be my next target. And it's very possible we melt down to the bottom of this broadening, falling formation here. So again, no squeezes. We're holding under 50 on RSI. MACD looks like it's going to cross under with falling momentum. So the market just looks very weak going into FOMC. So just be careful out there if you are holding longs into FOMC. All right, let's take a look at the Qs. And, very similar story, although this is a little bit weaker. So in this case, we didn't come into the 30-week moving average. We came into the swing low anchored VWAP or the COVID low anchored VWAP and got rejected. And now we have the 2018 low anchored VWAP below, right at around 283. 287, 283 are my two downside targets. We came into 287 and we bounced. I would expect if we continue to see weakness, 283 will be another level of interest to watch. Then under these prior lows from June, 258.21, that's going to be your 618 retrace from the swing high or all-time high to the COVID lows. So 618 rejection off of that. I think 258 is likely going to come. No squeezes. RSI weak under 50, MACD crossing or looking to cross under with falling momentum, bearish engulfing candle, not only a bearish engulfing candle, but what I call a double key close reversal. And so that's basically when you have one bar that closes under the prior two bars. So this outside bar is outside of both the last 2 weeks, and it closed below the prior 2 weeks lows. That's a very bearish candle right there. So I am expecting some more downside to come. Here's IWM, again, similar story, nothing new. Outside bar, double key close reversal, bearish engulfing candle, no squeezes, RSI under 50, MACD flattening out with falling momentum, rejected off of the COVID low anchored VWAP, rejected off of the 30-week simple moving average, rejected off of the 382 Fibonacci retracement at 187.47. 188 was the level to watch, got rejected off of that. We came back, we back tested 177.76. That's going to be your 618 from this move right here. And then 152 to the downside off of that swing high to that swing low. That would be the level I would watch next if we fall into it for a potential reversal back up. So yeah, I mean, nothing really different in terms of the bigger indices. They're all looking very much the same, bearish engulfing candles, weak price action. And like I said, FOMC will tell us, are we going to continue to head down, or will we see a reversal and go back up? I'm not a betting man. This is not a betting game, but I do see more downside coming. All right, let's look at some ETFs. This is KBWR. These are regional banks, so not your big banks, not your Bank of America, Goldman Sachs banks, but your more regional banks. And so, what I would look at here are just some of these names. It's not like a super relative strength chart, but it's holding up relative to some of the other names. So you could see last week, 2 weeks ago, nice strong candle. Last week, we closed under the prior week's high, but it didn't sell off and didn't have a bearish engulfing like we saw on some of those indices. And so to me, that's relative strength to the market. Yes, we're under the swing high anchor VWAP. Yes, we're under the 50 SMA, but we're over the 200 SMA. And we're over the COVID low anchored VWAP. And so, when you're looking at a weak market, you're always going to say, okay, yeah, you could play to the downside, or you could look for the relative strength in the market. And to me, this is showing some relative strength. So keep an eye on regional banks. Here are some of the tickers. These are some of the top names in the regional bank ETF, KBWR. RSI holding over 50, no squeezes to note. MACD looks crossed up and holding, although momentum a little flat. Okay, let's look at the next one. That's BJK. This is your gaming ETF. So DraftKings, Las Vegas Sands, MGM, Caesars. I've been noticing, these have been showing a little bit more strength of late. We've got a 5-week squeeze setting up. We are under 50 RSI, and we are under that 30-week simple moving average, but we are setting up in a bit of a wedge here. So if we continue to hold 34.29, maybe you see a reversal off of that in the next week or two and get a test on 38.70. I think anything over the 30-week moving average, you could see, we did have 1 week where we closed above it, but we failed that next week on that inside day. But resistance here, resistance here. So if we get a close over that 30-week moving average, then I would start paying attention to some of these names here. All right, next up is XLE. No surprises here. Energy has been one of the strongest sectors in this market for this year. We're back above that 30-week moving average. We've been back testing it the last 3 weeks and holding. We're holding over that 236 retracement from this swing right here. We could certainly backtest 6640, acted as prior prior support here and here before breaking out from prior resistance. So if we do lose that 30-week moving average, this would be the next logical level I would watch for a back test. But if we hold here, then I think we've got a shot at curling back up and going back to the highs in the next few weeks. So again, no squeezes. We're holding over 50 on RSI. MACD is tangled with rising momentum. So XOM, CVX, COP. As you know, if you're a member of my community, we have a active trade alert out on COP that's doing pretty well. So keep a close eye on energy next week. And here's XLV. This is your healthcare ETF. And you could see we're inside of a wedge here. We've been holding over this 125.44 level, for multiple weeks now throughout the year, or even into last year. We had this nasty gap down, but notice how we didn't break down from it. We just gapped down. And then that next week, we recaptured that level and back tested and held, back tested and held, back tested and held. So, over the 30 simple weekly super moving average, I think that's got a shot to move higher. And certainly outside of the wedge, I think 137 would be my target to the upside. We've got a 3-week squeeze setting up. RSI is holding under 50. MACD looks fairly neutral here. So some of my favorite names in the sector, UNH, AbbVie, those two really nice setups. But certainly take a look at some of the rest of these holdings here. So that is my review of the indices and the top sectors going into next week. Let me know in the comments down below. Let me know what you're watching. Let me know what you like on this chart, what you don't like on this chart. Tell me what you're looking at, and let's compare notes. All right, take care. Coming up with a new video on my top tech sectors that should be coming out shortly. Take care, everyone.